The futures market was created centuries ago out of the necessity from farmers and merchants to plan ahead of time. So they came with this agreement to set prices in futures date for delivery. With that futures date came the expiration of the contract. And with the expiration of the contract came the rollover. If you want to know more about rollover, stick to the end of the video. I will show you how to do it in NinjaTrader and how to do it in TradingView. Let's jump right in. There's nothing complicated about the rollover. Rollover means simply that institutions are migrating positions from one contract to the next expiration contract, right? And these positions can be long, can be short, we don't know. But since all futures contracts expire, institutions that keep hedging along the year, they want to roll over their positions from one contract to the other one, right? So what they do is they close the positions in the month that is going to expire to the month is gonna come next. In this case, we're in December 2023. The December contract expires in 15th of December, and they're rolling over their positions to the March contract of 2024. That's in the financial markets. Now, different commodities, they have different expirations. The stock index that I trade, the ES futures, it has 4 expirations in a year. The March expiration, June, September, and December, right? So that's very important for you to know. If you're trading crude oil or metals, they have different expirations. Not different months. They have crude oil, I think it has like 10 expirations. I'm not sure about gold, but it has more than 4 and so on. So if you're trading some asset, please be sure which ones are the expiration. And that's pretty simple. You can go to CME Group, right? And check here, and CME Group, you go markets. And here you can see all the, well, here you have like featured products, the most popular products. And I trade the ES, E-mini S&P 500. Right? And if you check the calendar here, you can see how the December contract expires this next 15, right? Institutions start rolling over their positions before the 15, so they don't cause like a volatility spike because they need to close their positions, right? So what happens if you keep a position open through the 15? There are two things. Either your broker is going to close it, they're going to close your position, you will be delivered. In case of crude oil, for instance, or corn, if you keep the position through the expiration date, some brokers will call you for the delivery if you have the money in the account. Remember, you trade futures with margin, right? Whatever you're putting into the positions is a little tiny amount of money of the overall value of the contract, right? So this is the calendar. And if you come here to volume and open interest, you can see, right, how the December contract still has the majority of volume, 2,200,000, and the March has 1,300,000 approximately. But you can see how the open interest, these are the positions in the contracts, right? Open positions, either short or long. You can see how this one is just being closed. 400,000 positions were closed just on Friday, and new 460,000 positions were open in the March contract, right? So this is what tells you, all right, the rollover is happening. And in the past, I used to wait, I wanted to wait for the new contracts to have more volume, right? But I understood if I'm trading less than 10 contracts in the E-mini, S&P 500, I don't think anyone will have any liquidity problems or slippage, right? So that's the purpose of being careful with the volume, right? But if you're trading 2-3 contracts, you will not have any problem, right? In my case, I am starting to trade the March contract starting tomorrow, right? And still, it's 1,300,000 contracts. There's a lot of liquidity. Okay, so that's from here. So you can check when the open interest is changing, and that's when the rollover is happening. Now, it usually starts happening 1 week before the expiration, right? So that would be last Friday. Okay. Another way to check here, you can see how the volume is starting to spike here on the March contract. Here 1.2, and I want to see this on Monday. I want to see this like 1.8 and 1.8 by the end of the day. That will tell me that it's already happening. Okay. So one thing that is very important, like if you use TradingView, just stay in this section. If you don't use TradingView, just skip till the next section, which is the NinjaTrader, right? In TradingView, you have I just purposely put the March contract here, but TradingView gives you the continuous contract, right? So it already rolled over. Because you can see here how 46.60 is the March contract's price, right? But if you put here the December contract, you see how 46.07 was the last price that we closed on Friday, right? So why I say this is very important. This is very important because you can see how there are like 53 points of difference, right? Why? Because every contract is, remember, they're settling prices in a future date. So they have different settlements, right? What if I'm trading corn and today, but the crop is going to be ready in 4 months? I want to set a price in 4 months, right? So it's a different price, right? But the same happens with the financial instruments. Different prices depending on the expiration. So you see here 46.60 against 46.07, which is the December contract. All right, so in the continuous contract, TradingView already rolled over the prices, right? And it's important because you can see that if you're trading, let's say we're gonna find a supply, right? And if you don't have the continuous contract, look at this one. This one is the December contract. You can see how the volume dies, right? If you check to the back, you see how there's very little volume. You cannot like look for zones that are like beyond 3 or 4 months ago. Why? Because the volume was so low that this contract was barely traded, right? So you need to use the continuous contract. So how do you do that? Just click here, ES, and it automatically is gonna, if you open up here, automatically the ES1 exclamations mark, that's going to be the current contract and adjusted to the back in the past, so you can see where supplies or demand were, right? That's a very important point, right? Because if you select one of this one, you will be selecting the period that you will be looking at the contract, but there were periods with very low volume, which is not reliable, and the period that is high in volume, which is very reliable, right? So that's what I wanted to share here. So always try to use the continuous contract. So TradingView does not have the problem that NinjaTrader has, because TradingView adjusts the data by the expiration, right? It adjusts it. So what happens to Ninja? This is the NinjaTrader chart that I've been using, right? This is the December contract. Now I want to show you when you come here and you go to tools, options, market data, and you put this global merge policy, merge non-back adjusted. You click apply, and then you reload your data. You will see a gap, right? Like this one. And you notice this gap, and you notice this gap. So this gap is not a real gap. This gap is just the difference in price, like I showed you before, from 1 month expiration to another one, right? So this is not a convictional, like a directional conviction from buyers. It is not. It is just the difference between the price of one contract and another one. So how do you avoid this? Just clicking on that option, right? And you can see gaps here. You will see gaps that probably are real. This one is not real. You will see how this one is not real either, right? So let me mark it off here. Sorry. Let me put a mark here, right? And a mark here, right? And this is NinjaTrader non-adjusting the chart for price. So it's very dangerous, because if prices come here and you see this gap and you think, wow, this is the directional conviction, probably buyers are here and this is an area for me to buy, but in reality it's not. It's just a matter of the difference between one contract and another one. Now, why and how you know the gap is good? Okay, number one, it happens not during rollover time. That's number one. This one happens during rollover time. You can see how the June 9th of 2023, and then here's September 8th, 2023, and now December 11th, which is tomorrow. You should have a gap because there are 50 points on difference. I already showed it to you on TradingView, right? So what you do is you come here, tools, options, market data, adjusted, you click OK, and then you right click and reload the historical data. And there you go. There's no more gaps here, right? So this is the chart that you need to be trading. Okay? This is the chart that you need to be trading. Okay? Now regarding the rollover, it's on Ninja. You come here, right? Starting tomorrow, you will start having the pop-ups, the windows that tells you, okay, let's roll over the charts. But if you don't have that by any chance, you come here and you go to database management. So it's tools, database management, and you can see here how all the rollover charts that Ninja is showing you, like the 10-year bond is new expiration is this one, and then you all update this, right? And what you do is you click a rollover, our features info will update the expire of the instruments across the all. Okay, so you read the message. Do you wish to continue? You click yes, and so on. Okay, and then you update all the charts. You click here, and then they will be updated. Okay, all right, that's it for this. If you want to just manually go from one contract to another one, I think it's still not showing here, but it's gonna be here tomorrow. It's gonna show the ES0423. Now NinjaTrader, sorry, ES0324, ES0324. So NinjaTrader makes it a little bit easier. You don't need to learn the nomenclature like the Z, H, U, whatever contracts on the stock indices, but just the number, right? You just need to know when the expiration is happening, which is in March, June, September, and December. Okay, that's all for today's video. Give me a thumbs up. Give us a thumbs up if you think you find value in this type of video, and consider subscribing to the channel. I'll see you in the next one. Bye.